Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the BlackRock chart. Very interesting stock. I don't think we've ever covered it on this channel, maybe very much in the beginning, but yeah, it's been a while. So let's take a look at the chart. Let's go. So we are on the Market Intel website, dailymarketupdate.com. Here we can click on our US Titans section. That's our stocks section. And here you can find updates about BlackRock and other stocks, Goldman Sachs, United Health, Coca-Cola, for example, Intel. So a lot of interesting stocks. Today we want to take a look at BlackRock, especially interesting, I think, for anybody who has invested or might be looking for an investment opportunity, because it's as important as knowing when to invest and when to find an entry, I think, is to understand when maybe not to invest or when to be very much careful. Because we are now looking at the 2-day chart here for BlackRock, and there have been some requests for BlackRock from some of you, and I know why, because the market has reacted to our trading area that was communicated sort of end of last year. Certainly we had a bullish view from then on the BlackRock chart or about BlackRock to form a larger B wave rally, but B waves are difficult to trade. B waves are not really, let's say, high quality setups normally. They are very, very difficult. What we were tracking here on this chart was a larger degree A, B, C structure. The idea is that, so we are long-term really bullish about BlackRock, okay? Really bullish because we have a wave one that completed at $973 in 2021, then a strong correction that we're labeling as an A wave, and then it was setting up for a B wave rally, which consists of a WXY structure. So the idea is now we are in this Y wave, which is an ABC, and we can take a look at the smaller time frame chart in a minute. But overall, this B wave, while it might stretch a little bit higher, is high risk because we have moved far away from support now. And once we get the first micro 5-wave pattern to the downside, it would indicate we are heading into a larger correction. Now, from an elite wave point of view, that would simply be the C wave of wave 2. So the wave 1 indicates we're in an uptrend. It's an uptrend, and the current correction is simply a wave 2 pullback or correction. But in a correction, especially when the market is overall quite bullish, B waves can overshoot. So technically, this is part of a corrective rally. The C wave that will then follow might never end below the 2022 low. So we might never go below $500, right? But the C wave, once we see more structure and once we actually see that it started, then we can identify a target zone for that C wave. And that C wave might be actually an entry opportunity. And we will communicate that once we see signals, but it will probably take a while. All I want to share with you is that risk is high up here. I wouldn't get bearish. I wouldn't short this at this stage. B waves can overshoot. We know that they can extend higher, but it's probably not the best time for an entry for a pullback trader, at least, right? Okay, if you're a breakout trader, then that's something different, but we know that B waves have to be treated with a lot of caution. So the risk is high. Be cautious, maybe not bearish, but we can see a little bit more detail now on the 2-hour chart. Here you can see that we're tracking the current move up as a C wave. And as I said, it might stretch a little bit higher. We've broken a key level here at $906.46, which was for a possible breakout trader a breakout point. But I personally, always say that with breakout trades, a lot of the rally is already done and best entries are typically found in pullbacks. But as I said, once we see a confirmation that this wave C of Y of B is complete, we will communicate that, and then we can look for targets of the wave C. And there might even be short trade opportunities. So for example, if the B wave is finished, then the C wave down that would follow is a 5-wave move. And it should get somewhere close to that low of the A wave, right? So maybe $500, $600 range, at least from what we can see right now. And the first 5-wave move down would then indicate the wave 1 of that C wave. And the wave 2 corrective rally, as long as it stays below the high, which hasn't formed yet, would provide a short trade opportunity. So letting the decline happen in wave 1 of C, watching for a corrective bounce, dead cat bounce you could call it, and then shorting that corrective rally and preparing for a 3rd wave move down in a C wave. And the 3rd wave is typically the strongest element of a trend. So I just want to communicate we are long-term bullish about BlackRock, but we have seen a major rally and we're already in the C wave of Y of B. So probably towards the end of that rally. Can still stretch higher, but we're pretty much now watching for first signals that this B wave is finished. And the C wave can offer opportunities in the short, on the short side, but also towards the end of the C wave, maybe again for a long trade. So we'll keep you updated about BlackRock. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you are interested in additional updates, feel free to register on our website. You will get then regular updates about BlackRock, and also let us know in the comment section which other maybe stocks, tech stocks or cryptocurrencies you want me to cover going forward. Thank you very much. Bye-bye.